I went inside China's biggest tech companies, Alibaba, Tencent, Huawei, and Xiaomi. These companies many Americans had never even heard of were growing at insane rates, being built by China's new generation of tech-savvy individuals who were obsessed with working. But that was all before the pandemic. Back when China's economy was on a tear and everyone was wondering just how many more years until it would surpass the US to become the world's biggest economy. For years, China's economy was unstoppable, growing so fast, with companies making huge profits and investors around the world excited. But then things changed, with once unstoppable tech execs like Jack Ma suddenly falling under the radar. Today, the economy is slowing down and many companies have either left or reduced their presence in China. So what went wrong? Let's dive into the details to understand how China went from an economic superstar to facing serious challenges. For a long time, China was growing at a breakneck speed. From the 1980s until around 2010, the country's economy was expanding by double digits, sometimes as fast as 10 to 14% per year. This was largely thanks to things like cheap labor. Many global companies set up factories in China to take advantage of lower wages. And then there was government investment. China poured money into building roads, bridges, airports, and entire cities, which helped fuel growth. And then, of course, the exports. China became the factory of the world, producing goods at a fraction of the cost that other countries could. Companies were flocking to China, and the country was making everything from iPhones to the shoes you wore. It seemed like a win-win for everyone involved. China got jobs and growth, and businesses got higher profits. So what went wrong? Fast forward to today, and China's economy is no longer growing at the same pace. In fact, in 2023, the country's growth rate was just 5.2%, less than half of what it was a decade ago. While 5.2% doesn't sound that bad, for China, it's a major slowdown. And several factors have contributed to this shift. First, the real estate crisis. A big part of China's growth came from its booming real estate sector. For years, China built entire cities anticipating growth and demand. Real estate prices skyrocketed. People believed that property values would just keep going up. But then things started to unravel. In 2021, one of China's biggest real estate companies, Evergrande, defaulted on its massive debts. The company owed more than $300 billion, and its collapse sent shockwaves through the economy. Many other real estate companies are now struggling, and the property market is largely in decline. And for a country where real estate made up 30% of its GDP, this is a huge problem. As home values fall, so does the wealth of millions of Chinese citizens, and people end up buying fewer homes. Construction slows, ultimately hurting jobs and growth. Okay, but there was also one major event here that really changed the course for China: the pandemic. Like the rest of the world, China was hit hard by the COVID-19 pandemic. But China took a very strict approach to containing the virus, locking down entire cities for months at a time. And yes, these measures helped control the virus, but they also hurt the economy. Factories closed, businesses went under, and consumers stopped spending money. Even when the rest of the world started to reopen, China stuck to its zero COVID policy, which only prolonged the economic pain. And by the time China started lifting these restrictions in late 2022, the damage had already been done. Many businesses had relocated or scaled back their operations, and consumer confidence was low. The third factor here is the aging population. See, decades ago, China implemented the one-child policy to control population growth, but now the country is facing the opposite problem: not enough young people. In 2022, China's population actually shrunk for the first time in 60 years. Fewer young workers means less labor for factories and companies and a greater burden to support the growing elderly population. This demographic shift is putting even more pressure on the economy. And then there's the rising labor costs. China used to be the go-to place for cheap labor, but that's changing because wages have risen a lot in recent years, making China less attractive for companies looking to save on production costs. And then countries like Vietnam, India, and Mexico are becoming the new hotspots for manufacturing because they offer lower wages and a more business-friendly environment. As labor costs rose, companies began pulling out or moving production elsewhere. Samsung closed its smartphone factory in China in 2019, moving production to Vietnam. Apple has been shifting some of its iPhone production to India and Vietnam. And Adidas has moved much of its shoe production out of China to countries like Vietnam and Indonesia. So companies are just relying less on China. Another big factor here, the US-China trade war. The trade war between the US and China was started in 2018, and it's hurt China's economy. Both countries imposed tariffs on each other's goods, making trade more expensive. And for China, that meant exporting fewer things to the US, which was one of the biggest trading partners for China. The trade war created uncertainty for businesses, and companies had to rethink their supply chains and move production away from China to avoid getting caught in the crossfire. Now, this was a big one. China's government has been cracking down on its biggest tech companies, which has just spooked investors. In 2021, China started implementing stricter regulations on big firms like Alibaba, Tencent, and Didi. The government said it was doing this to curb monopolistic practices and protect customers. But many believe that the government's goal here was to actually assert more control over the private sector. That crackdown wiped out billions of dollars in value from China's stock markets and made foreign investors nervous about putting money into Chinese companies. Alibaba's founder, Jack Ma, famously disappeared from the public eye for months after criticizing China's financial regulations. His company was hit with a $2.8 billion fine, and the government forced Ant Group, another one of his companies, to halt its highly anticipated IPO. Companies and investors got scared. It's hard to trust a system where the rules can change overnight. Finally, the environment and supply chain have caused a lot of concerns. China has long struggled with pollution, and the government has made efforts to reduce emissions, but this has led to energy shortages, factory shutdowns, and delays in production. Companies that are trying to reduce their carbon footprint and improve their supply chains are finding China's environmental challenges hard to navigate. Even Tesla has faced production delays at its Shanghai factory because of power cuts aimed at reducing carbon emissions. Quick break to show you something. Aura will show you if your information is leaked on the dark web. I actually know so many people who have been hacked lately, and Aura is a great way to protect yourself. I've been using Aura for a while now. Robert Downey Jr. is on their board. You can scan right now to see if you've been exposed, and check out the link below to save over 60%. You can protect yourself for as little as $10 a month. Okay, now back to the video. Okay, so what's next for China? China still has one of the largest economies in the world. It's not all doom and gloom, but it's clear that its growth story has hit some major roadblocks. Between the real estate bubble, pandemic, aging population, rising labor costs, and a tougher business environment, it's difficult to see China growing the way it once did. The government is now working to boost the economy through things like infrastructure spending and easing real estate rules. But many of these issues, like its declining population, are not going to be easy to fix. And global companies, which were once the source of growth for China, are now thinking twice. Some are pulling out altogether, while others are diversifying their supply chains to reduce risk. The Chinese government faces a difficult balancing act of fixing these problems while trying to keep the economy afloat and growing. Of course, China will remain a key global player, but it's clear that the days of endless rapid growth are behind it. And for businesses and investors, China's slowdown is a reminder that no economy is immune to challenges, no matter how big or successful it once seemed. Maybe the China story is a reminder to us all that the global economy is always evolving, and even countries that once seemed unstoppable can also face unexpected challenges. But let me know in the comments below, what do you think about the China growth story, and can its growth ever come back? While you're at it, check out more of my videos about tech and economics, and don't forget to follow.